Hi, in this video we're going to look at the cash flow statement for company XYZ for the year ended December 31st, 2023. By the end, you'll understand where the company's money actually moved and how to interpret each section. The first section is the cash flow from operations. The statement starts with net earnings of $2 million. That's the accounting profit, what the income statement reports, but we adjusted for items that didn't involve actual cash. So we have the additions to cash, depreciation of $10,000. That's a non-cash expense, so we add it back. Then we have a decrease in accounts receivable of $15,000. That's customers paying off invoices, so cash increase. Then we have an increase in accounts payable of $15,000. The company delayed payments to suppliers, conserving cash. Increase in taxes payable, $2,000. Taxes owed but not yet paid, so cash remains higher. Next, we have the subtractions from cash. The increase in inventory of $30,000. Add it all up and we get net cash from operations of $2,012,000. That means core operations produce slightly more cash than the accounting profit. That's a healthy sign. Alright, so the next major section is the cash flow from investing. Here the company spent $500,000 on new equipment. That's a cash outflow because they bought long-term assets. No sales of investments were recorded, so net cash from investing is $500,000. Negative investing cash flow is normal when a business is expanding. And the last major section of the cash flow statement is the cash flow from financing. This company raised $10,000 through notes payable, meaning it borrowed cash from lenders. That's the cash inflow. No dividends or debt repayments were listed, so net cash from financing is $10,000. Now combine all three sections, operating, investing, and financing, to get the total $1,522,000. That's the company's net increase in cash for the year. On the balance sheet, this appears under current assets, cash and cash equivalents. If last year's ending cash was $0, this year's ending balance would be $1,522,000. So here's the key takeaway from this cash flow statement. It shows that the operations are strong. They generate cash of $2,012,000. Investing is negative. That means the company is growing. Financing is small, only $10,000. Not overly dependent on debt, so that's good. So overall, company XYZ's cash position improved by over $1.5 million. A positive signal of liquidity. Okay, now that you understand how to read a cash flow statement, here are some key financial ratios. These 6 ratios turn raw numbers into insight.